What is money? We all use money. We need it to buy things and pay our bills. We work hard to earn it. We save it for retirement or a rainy day. We all rely on money, so why don't we know how money works and where it comes from? The surprising fact is that much of what we think of as money is created by banks, rather than the government, as most of us imagine. But banks don't literally print cash. The money they create is merely the numbers in our bank accounts. Despite what most of us assume, banks do not simply lend out already existing money. Like a magician, banks make money appear out of nothing whenever they make loans. But this money is not what it seems. The numbers in your bank account do not correspond to cash in a vault. This money is bank money, which simply means that the bank promises to pay up to that amount to you or on your behalf whenever you ask it to. We use it as money. We think of it as money. And it's as good as cash, even in a crisis, because of publicly backed deposit insurance. But because it is created through lending, at some point in the future, it has to be paid back to the bank with interest. When it is paid back, it disappears. This is not a trick. This is how much of what we think of as money is created and destroyed. So what are some of the implications of this bank-created money that we all rely on? Well, banks make their profits by charging interest on loans. So as long as they have confidence in the economy, they want to lend as much as possible. More loans and mortgages means that more money is created, and before you know it, house and other asset prices go through the roof. But if they make too many loans, particularly to non-productive uses as they most often do, the economy's private debt burden can become too large, causing people and businesses to scramble to pay down their debts. As we allocate more of our income towards paying down our debts, this cuts into consumer spending and slows the economy. Pretty soon, this leads to layoffs, and people start defaulting on their loans. Banks lose confidence and stop lending, and suddenly there's not enough money in circulation, making it harder for people and businesses to pay their bills. Businesses go bust, people lose their jobs, and houses are repossessed. This is what happened in the '08 crisis, and fundamentally nothing has changed since then. Money is still conjured up by the banks, mainly for non-productive uses, and it still disappears when loans are repaid. But it doesn't have to be this way. Instead, we could create more of our money supply through public spending. Not only would this help fund the government without requiring further taxes, but it would sustain our money supply and allow the economy to remain strong and stable, even as people pay down their debts. Our Money is campaigning to change the way money is created, and we need you to get involved. Share this video, join our campaign at ourmoneyus.org/signup to stay informed of our campaign efforts, and follow us on Facebook, Instagram, and Twitter at OurMoneyUS.